Hello, if you're getting into trading, then you really want to understand about the supply and demand. These are the most fundamental and also essential forces that we do see when most people want to buy a stock, but not many are available, then prices tend to rise. Good, but when there is more supply in demand, then the prices tend to fall. Now in this video, I'll be showing you what is supply and demand, why you should trade it, how to draw supply and demand, and also how to use it as a strategy for more profits. Okay, so stay tuned. Perfect. Now let's get to the charts. I'd say demand and supply, these are the aggressive buying and selling in the market, which are caused with the banks. We also do call them the big boys, those large financial institutions which take their role within the market. For us to identify those supplies and demand, if we are in an uptrend, we simply check on the first candle which gave the aggressive move within that zone. If you look at this area, we're having the market giving us a buy, and it was not just a buy, it was an aggressive buy with this big body. This big body shows that there was a bigger momentum, a bigger volume within that move. So we'll simply be marking our first candle which gave us that move. We'll be marking it as our demand zone. So we'll be using the rectangle tool, which is the best one for marking those demand and supply areas. So I'll take my rectangle, mark these zones, and kindly check it is not this candle. We'll be marking this candle with a full body. I'll be marking it this way, then I extend it up to preferably this is a good zone. Good. So I'll be using my path line. Take it from this where the market started this move. I'll be waiting for the market again to tap. Yeah, you might take your entry here, but it's not guaranteed. We want the best timing, the best entry to take our move. When it will tap into this zone, we'll be using an additional confirmation. Then we'll be going for that entry. So I'll be patient in the market and wait until it taps into my zone. Is when I'll be very cautious. Good. So at this zone, this is where you don't rush to take your entries. It's a very key zone. We want to mark it with the circle and do some analysis on it. Okay, so you check carefully what happened at this zone. The market tapped into your zone which you had marked as your demand from this area. It taps into this zone. We are not taking the trades. We are aware also that we are trading with the big banks, and so what we want to do, we basically want to trade with the big boys and the large financial institutions to have our profits guaranteed. So it taps into this zone. You will wait for the market to give you a confirmation. I'll prefer you wait for a green bullish candle as your confirmation. Yeah, you might take your entries here as well. If you're good on amounts or are good on capital, you might take your entries at this zone. So from that area you go long, take your long tool, put it at this zone. Yeah, you can adjust your TP up to the previous swing high is okay. This is your swing high at this zone within this area. Stop loss has to be slightly below the demand zone at this area is okay. Yeah, see what the market did at that area. It came and tapped at your demand zone, which was at this zone. Tapped into this area and gave you that move. This is where you took your entries and made some profits. That's how we do trade it at that particular zone. Now, another way to trade the supply and demand, you might also check on the wicks that do appear in the market. For example, look at this zone. We are having the market giving us this aggressive move. As we said, we check on those bullish candles. Candles with the big body show us some good momentums, okay? So at this zone, mark the first candle with your rectangle. Mark it this way. Mark it the full body, okay, this way. So we also check on the wicks. You can see this one is a pretty good wick. I also call it a doji candle, okay? So check at this demand zone. Wait for the market to tap again into this area. Give you a wick and also a confirmation candle, and you take your entries. So we take our long tool, put it at this area, target the previous swing high. This is your swing high at this zone. Stop loss has to be slightly below the demand at that area. Good. The market played out. This was your demand, gave us a buy, came back into this zone, gave us a wick, a doji candle, which also showed some uncertainty in the market. This one was the wick. We took our entry at this zone, targeted the previous swing high. Good. TP was hit up to this zone. That's how we also do trade it using the wicks in the market. Remember, we are only retail traders. We want to take our positions at the best entries, okay? And if you are to mark the supply also, we use it the same way. We mark the first candle before that aggressive move to identify the areas which the market would probably retrace back to give us more sell entries. Now that's how we use the demand and supply to get our potential entries in the market. Remember, don't use it as a one tool. Use it with more additional information. You might use it with other additional confirmation candles to go for those entries. Also check on the candle closure for more perfect entries. That's how we trade. Remember, Trade with Ayo. Let's conquer the market.